Imagine getting one of the largest tax refunds in US history, potentially thousands of dollars, without changing a thing. In 2026, millions of Americans may see massive refund checks thanks to a brand new tax law. But what's behind this, who really benefits, and what it means for your wallet? Today, we're breaking it all down in simple terms. And by the end, you'll know exactly why this refund could be so big and how a new auto loan tax deduction plays into it. Before we dive in, hit subscribe and ring that bell so you don't miss our future Money Saving Explains. The IRS and Treasury officials are now openly predicting what they call very large or even record-breaking tax refund season in 2026. Possibly the biggest in US history. So what's the reason? It's tied directly to a new law passed in 2025 called the One Big Beautiful Bill Act, signed by President Trump. This law changed a lot of the tax code, cuts and new deductions that apply retroactively to income earned in 2025. Here's the key. For most of 2025, payroll systems were not updated to reflect those tax changes, meaning employers were still withholding taxes using the old rates all year. That means workers paid more tax than they were supposed to. When Americans file taxes in early 2026, the IRS will calculate what was actually owed under the new law, and the difference will be refunded to taxpayers. That's why checks in 2026 could be huge, potentially thousands per household. Officials have mentioned that refunds could average about $3,800, much higher than typical recent years. Treasury Secretary Scott Bessent even said households could see $1,000 to $2,000 or more. And estimates from tax analysts suggest even larger figures. And it's not just broad tax cuts. The law adds expanded deductions for things like higher standard deduction, bigger state, and local tax deduction cap, SALT, child tax credit bump, special deductions for tips and overtime income, no tax on car loan interest, deductions for seniors, and more. All of this reduces your taxable income and translates into bigger refunds when filing. Now let's zoom in on one headline that's getting a lot of attention: the new auto loan interest deduction. Under the law, taxpayers who take out a new car loan can deduct up to $10,000 per year in car loan interest on their federal taxes. Yeah, it basically means no tax on part of your car loan interest if your loan qualifies. But there are conditions. It only applies to new vehicles built in the United States. Used cars or leases don't qualify. The car must be assembled in the US, check the VIN, and be for personal use. There are income limits. The deduction phases out if you earn above certain amounts. So unlike a generic refund check, this one actually reduces your taxable income before filing, which can lead to a bigger refund next year or a smaller tax bill. It's technically an above-the-line deduction, meaning you can claim it even if you take the standard deduction. But here's the reality. Not everyone benefits equally. The biggest refunds are expected for people whose employers didn't adjust withholding all year, which is just about most workers. However, some of the new deductions, like SALT and auto loan interest, tend to benefit middle and upper income filers more. That's causing some debate. Supporters argue this puts more money in Americans' pockets during a tough economy. Critics say the law disproportionately favors wealthier taxpayers and could increase the federal deficit. It's a mix of tax relief and political controversy, which is why this topic is dominating tax season headlines going into 2026. If you plan to file in early 2026, here are some pointers. Update your withholding now so you don't overpay again. Track deductions like auto loan interest or new tip overtime breaks. Consider consulting a tax pro, especially if you have complex income or credits to claim. These moves can help you maximize your refund, not just get lucky with a big check. If you're finding this breakdown helpful, make sure to smash that like button, subscribe, and hit the bell icon so you don't miss future breakdowns like this, especially when tax season hits and everyone is scrambling for answers. So here's the bottom line. 2026 may bring record-sized tax refunds because of how the 2025 tax law changes were rolled out. Retroactive tax cuts plus outdated withholding equals refunds that could be huge. And the new auto loan interest deduction gives some filers a real tax advantage if they qualify. Whether you're excited, confused, or skeptical, the 2026 tax season could be one of the most talked about in years. Stay informed, stay ready, and as always, we'll bring you the breakdowns that matter. Thanks for watching. See you in the next one.